Well, let's move to our first conversation today. It's a Monday, and we're going to look at basic developments around the world of business and what has played out in the past week, and of course, as we project into the new week. The International Monetary Fund has projected that Nigeria's economy will grow faster than that of United Kingdom and several advanced economies in 2025, following an upward revision of the country's GDP growth forecast from 3% to 3.4%. Despite the upward revision, Nigeria remains the fourth largest economy in Africa, behind South Africa, Egypt, and Algeria. However, the IMF's renewed outlook signals confidence in Nigeria's macroeconomic reforms and the resilience of the Nigerian economy. Meanwhile, the Nigerian Upstream Petroleum Regulatory Commission, on the other side, has announced that Nigeria's oil production exceeded 1.8 million barrels per day. That's in July 2025. The Commission, in pursuing the project's 1 million barrels per day and its incremental initiative, with modest gains recorded owing to the multi-stakeholder collaborative approach adopted. These and other issues will be our focus. What does it mean for Nigerians? What does it mean for our economy? And what does it mean for an average man on the street? My guest is Dr. Biodun Adedikpe. He is the Chief Consultant, B. Adedikpe Associates Limited. Dr. Adedikpe, it's good to start the week with you. Good afternoon, and thank you so much for joining Business Nigeria.
A very good afternoon to you, Tolu. I'm happy to be with you this afternoon to begin the week. Thank you so very much.
Thank you so much. We appreciate that too. Doc, I think I should start with how did you receive that news from the IMF revisiting Nigeria's growth prospect? That's looking at where we were, lifting from 3% to 3.4%. I'm going to ask that question in the context of the man on the streets that would look at it that, oh, well, 3% to 3.4%. How does this put food on my table? Tell us what this means. Was it expected? What are we doing correctly? What should we do more that would impact on the masses?
Excellent point to start from. Now, for me, it was not unexpected because I had a different perspective as we had discussed and reviewed in BA Consult. Our expectation for the Nigerian economy this year is even much higher than the 3.4% that IMF just moved our expected growth rate to in their July review. So now, for me, what it means is that we expect the Nigerian economy to grow faster than had been envisaged in IMF's forecast. And why did they take that position? Obvious pointer that not only IMF said, but every other analyst within the Nigerian economic space is the reforms that we have started doing in the last 2 years that obviously are taking a root in the sense that we have run these reforms for 2 years. We have not seen any instance of a reversal, all right? So once there's no reversal, that brings the confidence that we may likely see the outcome of that in the near term, which is what I interpret this revision upwards of the expected growth rate to be, on the one hand. Now, on the other hand, IMF and analysts will also look at how other stakeholders within the Nigerian economic space are responding to those reforms. So which means, in essence, that investors are seeing an environment that is providing opportunities for them to take positions and also ensure they are a part of the opportunities that are evolving. Now, beyond that also, as you asked the later part of the question, what does this mean for the man on the street? Now, typically, when you are coming from, quote and unquote, a crisis situation, the first consideration is to survive that crisis. The second is to stabilize, which means if you put it along that trajectory, we have crossed the survival line. We have also now come to stabilize the economy. So the third phase of recovery from the crisis is to restart growth. Now, the man on the street will not feel an impact until the economy starts to grow. So it is now, after you have started growing, you now begin the conversation on trickle down. So the man on the street, therefore, might not yet feel the effect of the stability macro, but as we deepen that and expand it, then we begin to see the effect of the trickle down, which is what will affect the man on the street.
I think it's a good start. Now, doing my research, I see that some factors responsible for this upgrade, increase in oil production, recovery in the services sector. For me, another argument on one side is money is gathered from subsidy removal and all of that should be reinvested. When we talk about those kind of reinvestments, what are there quick wins for government that will trickle down?
Well, I will say that already there's some portion of trickle down that most analysts ignore. And I will start first from Nel Fund, just to illustrate.
Okay.
Now, what Nel Fund has done is to take the responsibility for the school fees and maintenance of students in our tertiary institutions away from their parents. In which case, for any parent having a child in a tertiary institution in Nigeria who is benefiting from Nel Fund, there is no doubt that there is already trickle-down effect in that area. Which means not only do you as a parent no longer need to worry about how to pay the school fees, but at the same time, you don't have to worry about the sustenance of your child or work in the school. It's saying that through that same Nel Fund, monthly stipends are paid to those students. Okay? So that, for me, is one area of trickle-down. Now, there are several other parts which we don't even talk about. The reality, and I like to remind people about this, is that the state of our road infrastructure today is not exactly where it was some 2 years ago. Now, the reality, but oftentimes we don't talk about it. So the monies go into this. Where are they from? There's no doubt that they are coming from what we have saved by not paying the troublesome and largely fraudulent first subsidies of the yesteryears. So now, if you also look at sectors like aviation, now I'm not talking about the renovation of the international airport in Lagos that was just announced, but I'm talking about going through all our airports in Nigeria. Where they are today in terms of their state, especially the terminal buildings, is not where they were some couple of years ago. That's also something to point to. Now, beyond that, we have also seen even intervention in terms of some food items that the government imported directly. And the reality is that prices of some foodstuffs today are not exactly where they were 2 years ago, also December 2024. And in fact, if you can also look at it as at March this year. So they are not exactly at the same level. So now, trickle down is not about your realistic expectation that the prices of commodities will return to where they were 20 years ago. That is the misinterpretation of data. The reality globally is that prices increase, but what we talk about is the rate of increase. All right? So if the increase we have seen in the last 18, 24 months, in fact, 12 months ago, are not exactly the same level today, that also is some measure of gain that we should not overlook. Right? Now, beyond that, we have seen some other institutions that were strengthened. For example, there was nothing like consumer credit this time last year. That has become a reality now. So whoever is benefiting from the transaction done with Credit Corporation in Nigeria is getting credit at less than the commercial rate, and also accessing things that are manufactured here in Nigeria, mostly household items. All right? Whoever also will benefit from the recently inaugurated the Consumer Credit Company is also going to have access to credit that was not easy because there was no proper risk mapping and risk sharing. So when we look at all of these, we are in the right direction. And so for me, already there are some gains from the deployment of the savings from where subsidy removal. So, but as to whether we mention them when we have conversations like this, now become the issue. And that's why I decided to mention them.
That's really a good one, Dr. Adedipe. I totally agree with the fact that our airports, because that's where investors come in through. That's the first site when you come into a country, and it should be top notch. We travel and we see how airports are everywhere in the world. It must be welcoming if we want to drive the kind of investment that we need to drive. Now, we have a rebased inflation figures. Of course, that's no news. Now, we have a rebased GDP. And I'm sure you've seen that. You've analyzed that, Dr. Adedipe. But you know, when you look at the figures in dollar terms, puts us as a country at number 4. I am worried about that in two folds. We're talking about the AFCFTA, where African countries need to play big and all of that. Nigeria with its population, how does that come to you? What is your understanding of it? What do you think we can make out of it? Is anything going to change anytime soon?
Well, you know, when you talk about the GDP, primarily it is measuring the productivity within the space. That is talking about the value of goods and services produced. So even if your GDP is growing in terms of the domestic currency, which is the reality of Nigeria, our GDP has been growing steadily. When you look at the trend line in the last 15 years to date, it's been growing. There's no doubt about that. But where the challenge is that, number one, it has not been growing fast enough relative to not only population, but the desire to now create more jobs. And that is second dimension to it. We have been having jobless growth, so to say. So how do we now grow the economy? By creating jobs. So if you look at the GDP in Naira terms, and some analysts do argue that, why don't we stick with the Naira value of our GDP? Which if we do, we post clearly good news as far as the economy is concerned. But the moment you bring in the exchange value of the currency into the equation, then you get a much lower figure, a contraction, which reflects the exchange value of the currency, which means if we truly want to see the dollar GDP of Nigeria grow, then two things must happen. We have to grow the economy aggressively, all right? And it can be done, okay? Secondly, we need to also do those things that will make the Naira appreciate in value. That's the exchange value of the Naira. Now, if for any reason the Naira appreciates to, let's say, 700 Naira to the dollar as we are speaking, that will bring a doubling of our GDP, I mean, our dollar GDP immediately. So which means the real issue is the exchange value of the currency. And if you look at the data also, in the last 1.5 years, the economy is also moving in that direction. And that is why we see the Naira exchange value stabilize. Since November 2024 up until date, it has been within a very narrow band, all right? So in which case, we are growing non-oil exports, which is giving us good news. Between January and June this year, we have a figure of about $3.23 billion US non-oil exports. First quarter alone was $1.791 billion. So that is already, in fact, as at mid-year, we are almost at the entire value of non-oil exports for 2024. So which means right direction in that regard. Equally, if you look at our trade data, our import has also reduced. And not only reduced in terms of volume and value, equally the nature, or let me say the composition of our imports has also changed. Prior to domestic refining of petroleum, crude oil, we were importing about 38.1%, that is of our import, merchandise import, was basically refined products. But now producing sufficient locally, refining sufficient locally, the import of refined petroleum products has also dropped significantly. And that is good for us. So everything that needs to be done that will help the Naira appreciate in value is already happening. So we need to intensify effort in that direction. If you look at our external reserves as well, it has crossed $40 billion and above. That's even talking about the 30-day moving average at about $40.1 billion as our last 5 years.
Yes.
So if you look at that vis-a-vis the value of our monthly imports, So the monthly import bill compared to that is almost 9 months cover. So what all of these are pointing towards is that we are making the right calls when it comes to strengthening the Naira. So we need to maintain that. And I think that's essentially the key point that IMF saw here, that it brought forward in upgrading us from 3 to 3.4% expectation. As you mentioned, we produced in July over 1.8 million barrels per day of crude oil. That's good news. If you look also, even as we were, from what you told us earlier at the beginning of this program, okay, Bonny Light, Nigeria's reference premium crude, trading at over $78 per barrel, is above the budget assumption for this year, as it were. So that also is a bit of comfort. So which means that everything is pointing in the right direction. We just need to continue in that, along that line. And then we can, at some point, begin to see more of the trickle-down effect, that the man on the street will say, truly, things are changing in Nigeria.
Prof, before I let you go, Doc, staying with trickling down to the man on the street, we know clearly that FAC, that's federal allocation, monthly to state governments and local governments, have improved tremendously. At least in some cases, some states are getting double of what they used to get. The last meeting the president had with the governors, he had to come out straight to them that they need to wet the ground. Now, I think that, or many analysts like you, and of course, journalists like us believe, governors also need to do more. Local governments need to also intervene. The president is not going to be in charge of everything. So what sort of interventions, for me, do we need to start to see from states, from local governments, that will give us that inclusive growth that we need?
Fantastic question. Now, when you look at economic development, it happens at the subnational level. And what we have seen in considering what happens in other countries, especially those that have broken the back of poverty, is that they designed their development plan in such a way that competition was encouraged at the regional level, provinces, subnational, as we call it in Nigeria. So in which case, every state of the federation must identify what it has competitive advantage in. Now, I'm not talking of comparative advantage. I'm talking of competitive. So what do you have basic potential for? So let every state government, every local government invest in that area. Agriculture, some are into solid minerals, and so on and so forth. Okay? So the jobs will be created more at the state and local government level. Whatever even federal government does, it will still work through the state governments anyway. So the big question then is, what is happening at the state level? And we must not also forget that they get even more resources when you aggregate compared to the federal government. People often lose sight of that. We think, oh, the big number coming to federal government is big. But aggregate the states and FCT, they get a lot more than the federal government is getting. So we should therefore expect more from them and make them more accountable for more resources they get. We see some good news from some of them. Yes. That, for example, have extinguished the debt they inherited from previous administrations, which is good. But what we need more now is to invest in activities that will create jobs. And I will leave this, which is important, that oftentimes we don't talk about housing. Housing is a fantastic sector where you can create jobs because the value chain in housing covers every sector of the economy and also the social strata of the society. So if we look more in that direction, we can actually create growth that we have a lot of trickle-down effect through the housing sector than any others. Of course, agriculture is also important, but that is food. Take care of food and housing. Then, of course, the enabler there will be infrastructure. So if they invest more in infrastructure and in the key sectors, especially dealing with food security and then housing, we get a lot more traction. We can, in fact, grow faster than what IMF has projected for us in 2025.
It's a good way to leave it, Dr. Adedikpe. I know we can go on for the hour because there's a lot to talk about, not just the economy, but that's our time. Dr. Adedikpe is Chief Consultant, the Adedikpe Associates Limited. Again, thank you for starting the week with us. Wish you a very productive one.
Thank you so very much. Always interesting conversing with you.
Thank you, Doc.
Thanks for having me.
All right, there's